Welcome to Illuminati Silver. We tell the truth about silver. Today is Saturday the 10th of October 2020 and we're publishing our gold and silver weekly update for the week ending the 9th of October. We are also briefly looking at political events and economic reports which could shape what happens to the US dollar and therefore precious metal prices this coming week. Gold rose $29 last week from $1,901 to $1,930, having hit a high of $1,930 and a low of $1,873, a rise of 1.5%, following the previous week's rise of 2.1%. In sterling terms, gold finished the week at £1,479. That's up £10. Or 0.6%. And in euros, it closed at 1,631 euros. That's up 9 euros, or 0.5%. Silver rose $1.39, rising from $23.78 to $25.17, having hit a high of $25.20 and a low of $23, a rise of 5.8%, again following the previous week's rise of 3.8%. But to put it into context, this follows a fall the week prior of 14.6%. In sterling terms, silver closed at £19.29 an ounce, up 90 pence, or 4.8%, and in euros it closed at 21.27 euros. That's up 0.96 euros or 4.7%. For those not familiar with pence or euro cents, it's roughly up £1, just short, and roughly up €1. The gold to silver ratio fell from 79.9 to 1 to 76.7 to 1, suggesting that we now have a new range for the gold to silver ratio, which seems to be consolidating, albeit towards the upper end, but nevertheless consolidating within the 70 to 80 to 1 range. Bitcoin is up, standing at $10,904. The Dow Jones closed on Friday at 28,586, up 161 points on the day and up 958 points on the week. The S&P 500 closed at 3,477, up 30 points on the day and up 129 points on the week. And the Nasdaq Composite closed at 11,579, up 158 points on the day and up 504 points on the week. Brent crude closed at $42.85, up $3.58. And WTI crude closed at $40.60, up $3.55, both more than making up the previous week's fall. The dollar index stands at 93.05. That's down 0.79, following the previous week's fall of 0.73 points. Our conclusion last week stated, quote, "It is our contention for the week that we are still likely to see gold vacillate between $1,800 and $2,000 and silver really between $22 and $25. While gold moved between 1873 and 1930, while silver moved between 23 and 25.20 at its peak, closing slightly lower. So it has marginally broken through that silver or upper target level. We shall come back to silver in a few moments. So looking at gold, we can see that yesterday it closed at the week's high. It's important that we cast our minds back to late August, where the Fed modified its, quote, statement on longer run goals and monetary policy strategy, unquote, where the Fed changed its policy from targeting 2% inflation to targeting an average of 2% inflation. Now, this was important because it suggests that should inflation rise above 2%, it would not necessarily mean that the Fed would immediately raise interest rates, and this in itself set a tone. Now, this statement alone was sufficient for us to actually state that we expected gold prices to rise in the medium term, regardless really of which direction they moved in the short term. Because it's a logical conclusion to assume that if the Fed was prepared to allow inflation to go above 2%, it meant, therefore, that it was likely to introduce measures, which could be further reduction in interest rates, but more likely expansion of QE programs, but could introduce measures causing inflation to rise, which would effectively undermine the value of the US dollar, and therefore for that reason even alone, let alone other considerations, would act as a tailwind behind precious metal prices. Now, since gold's all-time peak on the 6th of August at $2,075, we've experienced a small but clear downtrend, with gold momentarily falling to a low of 1853 on the 24th of September. Now, since that date, we're beginning to witness a change in trend. Now, we have to add here that the change is not totally confirmed as yet, but our analysis suggests that whilst it's not fully confirmed, it does look quite likely. Now, gold has broken above the 50-day EMA, which is relevant and bullish. Now, there will be resistance at $1,960, that's $1,960, but considerable support at $1,850, with our floor of $1,800 lying underneath, and frankly a difficult floor to fall under in our assessment. There is no doubt the dollar weakness yesterday caused this bullishness in the gold price, which is supported by a likely stimulus deal coming out of Congress, which we've alerted to watch out for these past 3 weeks or so. Now, we're certainly of the opinion, and prior to the US presidential election on the 3rd of November, that gold will attempt to reach that psychologically important level of $2,000, though, unless something out of the ordinary happens, will not simply just jump there in one go. It's more likely to be a grind upwards, with intermittent dips. But once that 2,000 level is broken again and held, $2,100 will be on the cards, though that too may take some time. Now, we're not advocating $5,000 or $10,000 gold this year that the pumpers would have you believe, and not even $3,000 gold. Not this year. But nevertheless, a healthy and stable gradual rise. Now, let's take a look at silver. The 50-day EMA was at $24.55, and for us was quite an important resistance point. This was broken yesterday, and quite easily, or certainly quite quickly. Again, looking at the recent charts, we can see that silver rose to $29.88 on the 7th of August. That was in UK time, just after midnight in fact, but obviously the 6th of August for those whose clocks are behind ours. It followed by a minor downtrend and temporarily dipped to $21.70 on the 24th of September, but like gold since then, has been in a slow but clear uptrend with higher highs and higher lows. At the lowest end, and one we do not think silver will touch right now, we have enormous support at $20, or what we have termed as our absolute floor. And interestingly, notice yesterday that another analyst has used the same term for silver. Then, of course, we are now at the top of our $20 to $25 range, which we knew we would eventually reach prior to the election. The issue now, of course, is that previous resistance levels may not be sufficiently strong to prevent a rise to $26, or even then perhaps aim for 27, though the latter may take a little time. The next technical resistance level is $25.85, followed by $26.30. On the support side, we have $23.30 and $22.90 beneath. We've already mentioned that the US dollar weakness has to some extent, but not totally precipitated the rise in gold and silver prices over this past week, if not over the past 2 weeks. Now, looking at the economic news, we wish to remind listeners that we have published a number of videos, including an update last Wednesday, highlighting what has been going on with regards to the economic data and how it has tended to affect markets, though frankly that effect has been somewhat muted because to some degree the data has not been that extraordinary. For example, the markets services PMI and ISM index came out either as expected or slightly higher. The trade deficit was higher by over $3 billion. Consumer credit for August was down or minus $7 billion compared with a plus $15 billion the month previous, and initial jobless claims were 1.27 million compared with 1.31 million the week before, with continuing jobless claims down 1 million. So with this in mind, let's take a look at what is happening this coming week. Well, on Monday, there is nothing scheduled for the US because of Columbus Day holiday. Tuesday, we have the NFIB Small Business Index for September, the Consumer Price Index for September, and Core CPI for September. On Wednesday, we have the Producer Price Index for September as well, and on Thursday, the weekly Jobless Claims Report, of course, and the Import Price Index for September. Then on Friday, a raft of information or economic data for September, which includes the Retail Sales Index, the Industrial Production Index, Capacity Utilization, and the Consumer Sentiment Index. And on top of that, we have business inventories for August. So we are back to normal, with the majority of data being published on Friday, and with everyone having a keen eye on Thursday's Jobless Claims Report. So what are we to expect this coming week? Well, we have stated for the past few weeks that there are 3 factors likely to affect the following week's prices. 1, of course, the value of the US dollar. 2, economic data. And at the time, the health of President Trump. It does appear that the president's health seems to be getting back to normal, or at least that's what he'd have us believe, and is embarking once again on the campaign trail. The majority of polls places him well below his opponent Joe Biden, with national polls now showing Biden ahead by 10%. Though, admittedly, the handful of states which will really decide the election are much closer. And there is still more than 3 weeks to go, and anything can happen in that time. Not forgetting, of course, many people do not believe the polls in the first place. Now for us, we foresee either a stimulus package being announced this week, or on the brink of an announcement, or at the very least the market's expecting an announcement. This will serve to weaken the dollar further, and therefore add some upward momentum to precious metal prices. Now, if we're wrong, and an additional stimulus package is ruled out prior to the election, then we could see precious metals under pressure. However, it is our assessment we shall see positive prices this coming week, especially after witnessing Friday's show of strength and closure at week's high or near the week's highs. We're therefore raising our gold target slightly to between $18.50 and $20.50, and silver from $22 to $27, with gold most likely moving between $1,900 and $2,000, and silver most likely moving between $23 and $26. Now tomorrow we're publishing part 2 of our new series Peak Gold, and also on the Richard and Greg channel another topical issue of interest. Meanwhile, what do you think will happen to precious metal prices this week? Do share your thoughts. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. Finally, we wish you a safe, enjoyable weekend and a most prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.